All right, what's going on, YouTube? We back again. Day 4, September 24th, 2024. Gonna do a market review, see how we did, see the good, the bad, and the ugly. This is the Futures Prop Firm Funded Challenge. So without further ado, let's jump right onto the charts. All right, let me see if we can pull it up here. So make this quick. I gotta get to work. All right, so time is about 9:07. I'm turning off chart execution, setting up everything. I jumped on the charts. You know what I mean? I needed to mark up pretty much everything that was going on. I wanted to see where my session highs and lows were. I previously marked up the previous day's action. So I saw that there was 10 a.m. news. So I knew I didn't want to get in the market until after 10 a.m. I'm getting this wick here. This price likes to react off of the CE of wicks and then session highs and lows. So just key levels, right? Higher time frame key levels. After you hit the higher time frame key level, then we want to go down to the lower time frame and start to look for our entry model. And this just where patience comes in, right? So this is what I kind of liked what I did in terms of my trading. Didn't know which pair I wanted to trade. I was looking at both. You know, they both had clean setups. They were both moving in the same direction. And then I wanted to wait for the macro. I wanted to make sure I was waiting. So right now, old me would have just took this trade right off of the CE or the wick. Oh yeah, we're reversing. Get in, let's go. But I knew patience is key, and I had to line up with the model. So I waited. I want to see that 1020 macro. You see here, this is just me going over the checklist, making sure I'm locked in. Make sure you have your trading plan right in front of you when you're trading. You don't wanna forget, because it's easy to forget. So now it is 10:11. Fast forward a little bit. You already know the gist of what I've done. So on both time frames, I'm seeing this 15-minute wick rejection. I'm like, okay. The news gave us a push down. I'm marking up the higher time frame. Buy side liquidity. The areas where price will want to go back up to. See my top step key levels as well in the back of my mind. I was never really big on using them, but I mean, they do. Price does tend to react some type of way around them. So now we're just watching. Fast forward some here. 10:14. The macro yet. Okay. I'm just making sure I like my bias. I'm making sure that we're not about to just dump further down. See, now had this 15-minute candle close body beneath that down close, and I would have thought that was a bearish breaker. We would have continued to break down, but because it was such a strong wick rejection, I wanted to take it up. So I originally marked up this inversion to see if at the 1020 macro we were going to blow through it and use that as an inversion. We did not. Speed it up here. We're at 1018 now, so now I'm marking up this low fair value gap. I'm checking the dollar. I want to see what Dixie was doing. That was my main thing. Oh, I switched over to TradingView because you can't get Dixie on Topstep. So we're approaching. So we're in the 1020 macro. So now I just need to see SMT and a breaker or the inversion hold, I'll take my move in. So I liked how this fair value gap was supporting price off of the new day opening gap here. So that was another key level that I was annotating from the other chart. And then I saw we were supporting or respecting the bearish fair value gap the other way. So I was like, all right, we don't have nothing, right? We have nothing telling us which way price wants to do right now. So we haven't aggressively broken up. We haven't aggressively broken down. So let's wait a little bit. Let's try not to jump the gun. But I did want to position myself with a small position. You see the tilt was 50-50. They didn't even know. No one knew which direction we were headed because it's such a violent move down at 10 o'clock news. But still, and that's why I was glad I didn't jump right into this trade, but it didn't fit my trading plan anyway. So that was good. So now I'm watching SMT form. Okay, check. Right, we're running through our checklist. SMT. Are we in the macro? Yes. And do we create an inversion fair value gap or a breaker? Body close above this fair value gap. It's me. The inversion. Creating SMT. That was the key to entering the trade. And it did it. So I was okay. I was comfortable with that. I was like, all right, $40 of risk on. A risk entry. Right. Just previously, my other trades I was coming in at around 170 on it right off the gate just to see what we were going to do. So now it's 1025, marking out, that 2R. Is it 2R is the minimum target? So I see I have that. If I can't monitor the trade or I have to walk away from the computer, I'm setting it at 2R and walking away. But if I can be here and monitor the trade and walk it up, then we'll look at other targets. We'll look at standard deviations, 1.5 to 2, and seeing if it aligns with where buy side or sell side liquidity sits. So now at this point, I'm like, all right, so I got another fair value gap within my inversion. So BPR, right? So I'm liking the BPR. I want to see price support this BPR. So as of right now, I'm not mad at it. I was getting antsy. I did want to go, full bore. Because I was like, I want to make back, the $720 that I'm down. But nope, we did good risk management. So another plus. Didn't just jump head first just because I saw the trade going a little bit in my direction. Now here, based on my entry criteria also, if it would have respected this candle, no body close, and closed above the EMA, it was a green light to add. So it hadn't done it yet. So that's why I only have the one position on. And I'm just waiting. Didn't like that that 1 minute candle came down there and closed. Should have closed out right there. And then, reset, reevaluate it, and let it do what it needed to do. So that is a lesson learned right there. If we disrespect that candle after blowing through the entry candle or fair value gap, we're going to go ahead and chalk up our loss and reset. There was no need to take that extra $20 loss. So right now we're just waiting. It is now 10:30. Okay. So remember the 10:20 to 10:40 macro is in 50 to. So at this point, right, come down. Still in the 1020, 1040 macro. I went ahead and added a position because I liked how the momentum was. I mean, it just made sense. It aligned with what I wanted to see. So I'm not mad at the additional entry there, the scale in. You know, you add to your adding to a winner, right? Because I knew price came down below this low after the SMT. It invalidated my direction. Simple as that. That was the risk I was willing to put on to see if I was right. It wasn't crazy risk. I wasn't sweating. I wasn't about to be mad. I wasn't this, you know, the amount wasn't revenge tradable mad. Like, oh my God, I'm so pissed off that I lost $88 on that trade to see, right? For the potential to get my 2R. And like I said, it fit the narrative. So I did see those equal lows. Didn't like them. I don't like equal lows. You really don't like equal lows beneath when you're about to go. So something I guess I could have taken from that, even though we did it from that bullish engulfing, is those equal lows. So I could have waited, let those get cleared out. So now at this point, we're still in the macro. That breaker was nullified because we didn't blow through it. You want your breaker to be pretty close to immediately blown through. So now let's see. I'm seeing SMT form. So I'm just looking to see that. I wanted to see, okay, so we had a trend line, right? Trend line going up. Seeing how price reacts off the wick. Because remember yesterday's trade, I said, hey, put your stop loss beneath SMT. And we'll see what happens. So, all right, so we got stopped out there. Nah, man, ain't getting stopped out, right? Looking, I'm like, all right. Then we form a new SMT. And I'm like, all right, we'll just wait. We'll wait for the next macro. Part of me was like, oh, do I go bearish? No. Sit back and you wait. You let it play out. So I'm like, all right, better wait till 1050 then. Where's my equal highs? It makes sense. Let's let the market show us what it's gonna do. So I'm just sizing up the risk. I just want to see what it looks like. You don't want to get greedy. So I'm looking like, all right. I think our SMT was with Dixie at this point. Was our new just identify we had a trend line liquidity, so good confluence to why we'd want to go higher. Yep, that was the SMT, the new SMT that had formed at 1040. At this point, I'm thinking, man, I should jump in this right now. It's only 1 minute outside of the macro. No, don't do it. Much as you want to do it, more often than not, you will lose and it will mess up the trading plan. So I didn't. Part of me wanted to do it. So I'm patiently waiting. And I knew if I could get my first position in a low risk position, I'd be able to walk it up. So on the 32nd, I knew I had a breaker. I knew I still had, once again, you got that engulfing. Wanted to do it. Wanted to get in right away. I needed to see price come right back in here. 1050 and give me what I needed. It was promising, but I knew that bearish fair value gap was the purple box was sitting there waiting to reject. So wasn't strong enough. And once again, the macro. So we're waiting. So it is now 10:45. So price is moving in my favor pretty heavily. Didn't want to FOMO in. So I'm just sitting there waiting. So I'm thinking, all right, do I want to just take this breaker? Will price come back down to this fair value gap? Is the risk to reward worth it? So I'm like, all right, that is 2R. That is the breaker. I like it. I like where we at. 3 minutes from the macro. I wanted to see that see that step of fair value gap you like, right? Where the body, the third candle doesn't close above it. That's a fair value gap we need to come back and revisit. So we're 2 minutes. Execution. I want to see it respecting. So I'm looking to see my stop loss. Okay, 6 points. All right, cool. 420. If I do 4 contracts, all right, cool. That's good risk because I was like, all right, 88. Puts me at about 208, right? I was thinking about my max risk was 200. So and then part of me was like, well, wait a minute. What if it comes deeper? So initially it goes up to 150. The entry was because we were at the macro. It respected the fair value gap. We had the breaker block activated. I liked everything I saw. Price came back down below this breaker. We were invalidated regardless, right? Those equal highs were too clean to not target initially. I'm not even doing standard deviation at this point yet. I just needed my clean level to target to see. So I got my 2R. This is where I know if we start wiggling around, consolidating, doing anything crazy, go ahead and close out. If I need to walk away, got my closeout target set. So now I moved my stop premature. I think that was kind of a little bit of wanting to see price come back down because I really didn't want to see it invalidate that. It didn't need to come back and visit this fair value gap. Did it come back and visit the breaker? Yeah, sure. But I was like, you know what? We can just go ahead and start trailing. I didn't want to go. So anyway, come back and visit break even. So now I'm just going to the higher time frame. I want to see what the higher time frame is doing. So we hit the we hit this 15-minute fair value gap, and if you, it's where you can get kind of nervous, right? Hit that 15-minute fair value gap, and then we started. I'm sorry, it was a 5-minute fair value gap. It became an inversion 5-minute fair value gap. The gaps being created, love those, right? Just moving price in your direction. So I didn't know what was going to happen when we hit this bearish 15-minute fair value gap. I'm thinking, all right, everybody's going to be resistance. Are we going to push back down? And this is me. I was like, man, ooh, yeah, that's me. Right back to break even. Yeah, I made all the money back in one trade. Nope. Nope. Base hits. Do what needs to be done. So at this point, yep. I was like, all right. I'm at 1 to 1. 150 initial risk. So I was like, all right. So go ahead and move it up. And the time is getting, I had something to do. I think I had to go to the gym or something. So I was like, oh man, I gotta hurry up. My buddy's texting me, and I saw it, that 15-minute acting as a little bit of resistance. And I'm like, well, if we close above that, we have an inversion on the 15, which is even stronger in our favor to continue pushing higher. And I didn't want to over leverage or over risk to add into it, but we were good. We were just going to allow price to continue with the position that we were in. Got the inversion from the 5, another fair value gain on the 5, on the other direction, on confluence. So now it's 501. Price is moving. I'm unaffected at the dollar amount. I'm not saying, I'm not thinking anything about it. It just is what it is. It was a trade. We entered, we executed, we're letting it play out. Right? I wasn't gonna rail it all the way up and try to protect the 130 or whatever. If it came back down to take me out with minus 50, then I guess it would have been minus 40 on the day. 130. Actually, no, I was down 90, so it would have been minus 140. I think we missed. Now that we know the trade. So you see, it was just more. So we're at 9. It's 11:10 at this point. So now the macro's over. So now it's just a matter of, in the macro, you could close out when the macro closes. Fine. Push to break even, because I saw price didn't really run. Did this 15-minute fair value like I wanted to see, because it came back. So that's why I didn't move to break even yet. So I'm waiting. At this point, it's just stalling out. Nothing's happening. I don't know why price it wasn't moving. Okay, I think maybe the connection. I think I lost connection or some shit. So we're just going. And you see, I mean, the target was realistic, right? It wasn't far-fetched. It wasn't trying to get a home run and make $2,000 or something crazy. So now at this point, I'm watching the 5-minute. I'm like, well, if we reject and start coming back down, I'm gonna lower my risk. That was it. Stats. Let's take a look at the stats here. So this was for yesterday. All right, here we go. We're back. Sorry about that. I don't know what happened with the internet, but let's just take a look at the stats here. As we like to review every day so we can see what trades we're taking. Transparency, right? Profit factor, we like it. Small loss, bigger gain. It's 50% day. What's the coach's tip of the day? Always have reasonable expectations with your trading and know that you can only get out of this what you put in. Risk management, patient discipline will bring you success in this trading journey. I like that. All right. Topstep, good. So as of right now, as we know, we had 3 losing days in a row. Tuesday is the most profitable day because it's the only day we've been profitable, right? And that trade for about 48 minutes. Key is, when were we in the trade? During the macros. So you have to be in your trade when you're in the macros. That's the best time to do it. All right, yeah. So like I said, 3 days, right? 1, 2, 3. We were down as much as 700. And then yesterday we bounced back. So I'm not mad at it. You didn't allow revenge trading to put me deeper in the hole. So now we are only 314 down on the week or on the account since we started it last week. And we will, just trade according to the plan. The good, the bad, the ugly, it'll come, it'll go. So you just got to keep going and know that you can turn it around at any point. That's the nature of trading, right? What we lose is the risk we're willing to put up to see if we are right or wrong. If you follow your trading plan, you can't be mad at yourself. That's a good day. When you lose, if you follow the trading plan that has an edge, you're gonna be profitable overall in the long term. So not mad at that. So with that being said, right, it was the good set realistic TP price target. The risk management was good. Didn't over leverage just because the trade started going in my favor on the first trade, because otherwise that could have taken me out for the day, and then I don't catch the actual move at the next macro. Patience. So that ties into patience, being able to wait for macro and not taking the trade just because it was 2 minutes before the macro, right? Or whatever the case may be, because bust will come around, right? And then the last part of the good that I think is huge in understanding is not letting greed come in, right? Since I made that, I didn't think, oh, that's house money, right? How gamblers do, that's house money. I can go and get some more. Let me try to milk it. Let me try to trade the other direction, or let me stay on these charts even longer. I don't want to stay on the charts all day long. If I can get off the charts and make my money, I'm walking away. So I think the walk away is big. You don't take that for value. There is being able to walk away, take your pound of flesh and go. In terms of the bad, I don't really have any bad characteristics in that. So I didn't see anything as bad with yesterday's trading action. And then the ugly are toxic habits that we just have to avoid. And we didn't have any yesterday. There was no revenge trading. There was no chase, hope trading, none of that. There was narrative. There was a plan, and then we executed the plan. So I was very happy that we didn't have any ugly habits, because ugly habits will kill your account. They definitely will kill your account. And I think the walk away or takeaway lesson learned here is one good trade won't make you, but one bad trade can break you. We have to trade with a long term mindset, right? I wasn't. Could I have made all of that back yesterday? Obviously, as we saw where it ended up closing out at, but you can't try to bank your bankroll on one trade getting you back to break even or making you money. If you live like that, you're gonna die like that, right? So once again, one good trade won't make you, but one bad trade can break you. Have that long term mindset. And I think that's it, and we'll be back here next time and follow the journey, man. Like, subscribe. We'll see you.